A major market shakeup is coming, and if you're holding XRP or HBAR, you need to pay attention. The crypto market moves in cycles, and history has shown that every bull run is followed by a brutal crash. Many investors get caught up in the hype, only to watch their profits disappear when the market turns. That's why having an exit strategy is critical, especially as we approach 2025. If you don't plan ahead, you could end up holding assets that lose a significant amount of value when the market corrects. There are several warning signs that a crash could be coming. First, history tells us that crypto moves in predictable cycles. After every major bull run, there has always been a steep decline. Look at what happened in 2017 and 2021. Both cycles saw Bitcoin and altcoins skyrocket, only to collapse by more than 80% when the hype faded. If history repeats itself, 2025 could be the year when the next big crash happens. Another major factor is the global economy. Rising interest rates, inflation, and economic uncertainty all play a role in shaping market trends. When financial markets become unstable, investors tend to pull money out of risky assets like crypto and move it into safer investments. If this happens in 2025, we could see a huge drop in crypto prices, just like in previous cycles. Regulations are also a big risk. XRP has already been in a long battle with the SEC, and while Ripple has made progress, regulatory uncertainty still exists. If new rules or lawsuits target crypto projects like XRP or HBAR, it could lead to panic selling. Governments around the world are cracking down on crypto, and any major policy change could trigger a sell-off. Finally, institutional investors control a huge part of the market. Big players don't invest in crypto to hold forever. They are in it to make money. When prices rise to extreme levels, institutions start selling to take profits, leaving retail investors to suffer the losses. This pattern is repeated in every market cycle, and 2025 could be no different. So what does this mean for XRP and HBAR holders? Should you sell now or wait? In the next section, we'll break down where these two cryptos stand in the market and how they could be affected by the next crash. XRP and HBAR have strong use cases, but that doesn't mean they're safe from a market crash. While both projects have solid fundamentals, they are still affected by market cycles, investor sentiment, and external risks. Before deciding when to exit, it's important to understand their current position in the market and what challenges they might face in 2025. XRP has been one of the most talked about cryptocurrencies for years, especially because of its battle with the SEC. Ripple has worked hard to establish partnerships with financial institutions, and XRP is already being used in real-world transactions. However, the legal uncertainty surrounding XRP is still a risk. Even though Ripple has won some victories, future regulations could still impact how banks and businesses adopt XRP. If new restrictions are placed on XRP in the US or other major markets, it could limit its growth and cause its price to drop. Another concern is XRP's supply. Unlike Bitcoin, which has a fixed supply of 21 million coins, XRP has a total supply of 100 billion. While not all of these coins are in circulation, the large supply makes it harder for XRP to reach extreme price levels. Even if demand increases, XRP's price movement may be slower compared to cryptos with a lower supply. If investors expect massive gains and don't see them quickly enough, many may start selling, leading to a price decline. On the other hand, HBAR is gaining attention for its enterprise adoption. It is backed by the Hedera Governing Council, which includes companies like Google, IBM, and Boeing. HBAR is designed for fast and energy-efficient transactions, making it an attractive option for businesses. However, HBAR's price hasn't exploded like some other altcoins, mainly because it is focused on enterprise solutions rather than retail hype. While this makes it a strong long-term project, it also means that HBAR's growth may be slower and more controlled. Despite their strengths, both XRP and HBAR are still part of the broader crypto market. When Bitcoin crashes, almost every other cryptocurrency follows. If Bitcoin enters a bear market in 2025, XRP and HBAR will likely experience heavy losses, even if their technology remains valuable. This is why having an exit strategy is important. So how can investors protect their profits and avoid major losses? In the next section, we'll go over a detailed 2025 exit strategy for XRP and HBAR, including key price targets and warning signs to watch for. Having a solid exit strategy is crucial if you want to protect your profits and avoid getting caught in a market crash. Many investors hold onto their assets for too long, believing prices will keep rising, only to watch their gains disappear when the market turns. To prevent this, you need a clear plan for when to take profits and when to exit completely. Let's go over my 2025 exit strategy for XRP and HBAR. The first step is setting realistic price targets. Instead of waiting for an unrealistic number like $10,000 per XRP or HBAR, it's smarter to take profits at key resistance levels. A good strategy is to scale out of your position in portions. For example, if XRP reaches $5 or $10, consider selling a percentage of your holdings instead of everything at once. This way, you secure profits while still having some exposure if the price continues to rise. The same applies to HBAR. Set realistic price targets based on past market cycles and major resistance points. Another key part of my strategy is portfolio diversification. Putting all your money into one or two assets is risky, especially in crypto. If XRP and HBAR are a large part of your portfolio, consider taking profits and moving some of that money into stable assets like cash, gold, or even Bitcoin. Diversifying helps protect your gains if the altcoin market crashes. Setting stop-loss orders is also important. A stop-loss automatically sells your holdings if the price drops to a certain level, preventing you from losing too much money in a crash. If XRP or HBAR reaches a peak price and then starts falling, having a stop-loss in place can help you exit before the market collapses. Many traders set stop-losses at key support levels to avoid being wiped out during sharp downturns. Timing the exit is just as important as knowing where to exit. A good sign of a market top is when mainstream media starts hyping crypto, retail investors are rushing in, and prices are skyrocketing daily. In past bull runs, these moments signaled that a major crash was coming soon. If 2025 follows a similar pattern, watching market sentiment can help you decide when to exit. Finally, remember that taking profits is never a bad decision. Many investors get greedy and refuse to sell because they think prices will go even higher. But the crypto market is unpredictable, and what goes up eventually comes down. Locking in profits ensures that you actually benefit from the bull run instead of just watching numbers go up and down. But what happens after a crash? Should you reinvest in XRP and HBAR, or is it better to move on? In the next section, we'll discuss whether these assets can recover and what to watch for in the future. After a market crash, many investors panic and assume that their assets will never recover. But history has shown that strong cryptocurrencies with real-world use cases tend to bounce back over time. So, will XRP and HBAR recover after a crash, or should investors move on to other opportunities? Let's break it down. One of the main reasons XRP and HBAR could recover is their long-term adoption. Unlike meme coins or hype-driven projects, both of these cryptocurrencies have solid utility. XRP is already being used for cross-border payments and liquidity solutions, while HBAR is gaining traction in enterprise and government use cases. If real businesses continue using these technologies, demand for both XRP and HBAR will remain strong, even after a market downturn. Looking at past market cycles, Bitcoin and Ethereum have crashed multiple